with another mortgage rates live with the mortgage calculator. My name is Nick Hiersche. I am the president and founder of the mortgage calculator. We are a lender that operates a little bit differently. We offer a plethora of programs from conventional to FHA, USDA, as well as your non-conforming, non-traditional programs where we can qualify using alternative documentation. So today we'll have a little bit of a discussion on some of our specialty products. Let me go ahead and introduce one of them that we'll talk about here in a minute. So our most popular products are our real estate investor loans. These are also known as DSCR loans. These are amazing products with no income or employment, just rental income used to qualify. And we can go up to 85% LTV on a purchase and up to 80% LTV on a cash out. Obviously, those are the maximums. So we'll explore some of those options, which there are a few options, as well as some more traditional options as well. And we'll have Jose, my co-host here, talk a little bit more about the specifics of that in a minute. And I also have our co-host Kyle here, who will talk a little bit more about how our team works and how to connect with one of our loan officers. So let me go ahead and go into the regular rates here that we typically go through every day. We always want to check out the way the marketplace is looking and go ahead and explore that here live as our partners have posted new rates. So we built this tool. This is a tool for mortgage professionals. This is just to show some rate indications here. So again, if you have a loan that you're working on or you're a borrower, please get with one of our licensed loan officers so that you can get a real quote. This is just going to give us an indication of our 100+ bank partners and outlets that we have to do different types of loans. So our pricing system here will just show a few of our partners that have instant pricing and have issued new rates this morning. So we always want to go through and just check out some basic scenarios. We'll do a 80 LTV, 20% down, 80% loan. And our desired price, this means there's a par rate usually with no cost. Typically, for the example purposes, do a 1% buy down there. So we have a little bit more reasonable rates. And we're going to do a conforming example first, always, of a purchase, 30-year fixed, primary home, single family, 1 unit. And for example purposes, we'll use our address here at the office. And for example purposes, we're going to keep 760 as the estimated FICO and 40% as the estimated debt to income ratio. So these are our basic scenarios that we're going to set up in order to do all of our different examples today. So let's check out what our partners are offering this morning for regular conventional loans, which everybody's used to. So these programs here looks like from 6.25, and we have hundreds of different partners and banks that range up to in the sevens. These are the conventional rates this morning as of the new rates this morning. Now you see here our program here is obviously showing what is approximately the best rate and cost combination, but this is for a home ready program, which is a specialty program from Fannie Mae. This is a home possible specialty program from Freddie Mac. So let's go ahead and scroll down to the standard program and see what the best combination of a standard conforming 30-year fixed. Looks like we're right about a 6.5% rate here for this option, or a 6.49 for this option. So these are great options for our borrowers that qualify conventional. Now, we always want to check out some other options. For those that don't qualify for conventional financing, typically the next go-to option is FHA financing, which allows us to expand our DTI qualifications and a few other benefits as well. But along with those benefits comes some costs. So we'll highlight those here in a second. Let's set up a basic scenario. Everything the same as we did before. FHA, 80% LTV, 20% down. Purchase, 30-year fixed, primary home in Florida with a 760 FICO, 40 DTI. So everything else the same. We will see what the FHA rates are from our banks and partners this morning. And you see this is our FHA program. We have rates from 5.75 in this case for approximately 1 point in buy down. But the important thing to note on the FHA is the APR is a little bit higher because there are fees and costs associated with the FHA loans, including upfront mortgage insurance and monthly mortgage insurance that are required there. So always key in on the APR, which allows you to compare side by side these quotes. And again, get with one of our licensed loan officers in order to give you a full loan estimate with the full APR breakdown. Now, what really makes us special here at the Mortgage Calculator, what we really get excited about, are our options that go beyond everything that the conforming and conventional and even FHA, VA, and USDA offer. We won't go through VA today, but for those who qualify for VA from our armed services, we thank you. Please get with our loan officers. They can quote this instantly as well, but not everybody qualifies, so we won't go through that today. And USDA as well is based on property. So if you are looking for a rural property, USDA is a great option, but not everybody purchases a rural property. The options that we love here are our expanded options, aka non-QM. So I always love showing these every day and showing the comparison side by side on the same scenario. So for the same 20% down, 80 LTV loan with 1 point in buy down for a 30-year fixed on a primary home, we can use alternative income documentation to qualify. So our most popular alternative documentation income is bank statements. So typically we do a bank statement program for a self-employed borrower. So we're going to click self-employed here. And typically those are people like our realtor partners we love to do loans for, or people in the gig economy, anybody who maybe a Schedule C on their tax return and maybe has a stronger bank statement than their tax return. Maybe they have deductions and depreciation and other things that cause them not to qualify conventional. We can use 12 months of bank statements to qualify to determine a DTI. So in this example, we're going to use 12 months of bank statements to calculate a debt to income ratio for this self-employed borrower. So these are some of our most popular options. And we'll obviously see, since these are non-QM, non-conforming, they're going to be higher rates, but these are for borrowers who may not otherwise qualify using a conventional loan with full tax return documentation. So this is an option for bank statements. Obviously, this is a very high cost. That partner obviously doesn't have a higher rate than this, so I wouldn't recommend this. The most reasonable option here, this is a 30-year fix with alternative docs at about an 8.25% rate with about 1 point in discount cost. So this is a great option that goes above and beyond all of the conventional programs to allow our borrowers who may not otherwise qualify to get into homes. These also go above the conforming limits and can go up to usually about a $3 million loan for most of our banks and partners. So these are great options. And as you can see, we specialize in these non-QM options and have dozens of banks and partners that offer different types of non-QM. And you see some of these specialty programs are a little bit higher rate, but they have different qualifications. So please get with our loan officers. They can find exactly which one of these programs will fit you best. Now, before I pass it over to Jose to talk in detail, let me pull up a couple other examples that we want to go through. We also want to run through on this daily mortgage rates show the investment properties. So a lot of our loans that we do here at the Mortgage Calculator are for investors that are seeking investment properties, either cash out or to purchase more. And we typically offer them conforming, but our more popular non-conforming non-QM options are also very popular. So first, let's pull up a investment rental property, conforming, conventional purchase, 30-year fixed, and see what options we have. Keeping everything else the same for a 1-unit property here. Everything else is the same. This is using full documentation tax returns for a conforming loan. And we'll see here that the government entities, Fannie Mae and Freddie Mac, have added a very large fee basically for investment properties. So the conforming government-sponsored entities are adding, what they call penalties or adjustments or fees, in other words, for the borrowers. So you see here the rates are a little bit lower, but obviously there's a large amount of fees involved with the investment properties here when we're using a conforming loan. So here's some great options. It looks like from 6875 has a crazy amount of cost. A little more reasonable cost would be a 7125 with 3 points in cost. But you see we have tons of banks and partners that are still offering this, but very high costs and a little higher rates than for primary. So since the conforming, these are also rates that may not even pass compliance in some cases. So conforming options for our investors are less popular now than ever. What we do to offer our investors other options are our non-QM programs. So under our investment property, if we pull this over to 80 LTV like we've been doing the whole time, and we pull this to 99 like we've been doing, we can click on expanded guidelines, and we can use our alternative income documentation. So for this example, we can pull up, could be a bank statement option. So if a borrower wants to use a non-QM option and use bank statements to qualify, which is very popular for an investment property, we always add a prepayment penalty for those non-QM loans. So a little bit of a different type of product, But these are great options for borrowers who may not otherwise be able to purchase an investment property. And let's check out the rates today. Oops, and I always forget that. Got to click self-employed. Set this back up. You see these are live, so it's giving me errors live. So for bank statements, we do have to be self-employed. So that borrower does have to be self-employed. Everything else is the same now, so this should work now. So here are alternative documentation options for investment properties. So from an 8.625% rate for about 1% in discount. And we have a few other options for higher rates and different discount point options. But you see, we really specialize in these alternative options for our borrowers. Bank statements is popular, but the most popular product that Jose is going to talk about here in a second is our DSCR product. DSCR stands for debt service coverage ratio. What that means for everybody out there: no income, no employment, no income documentation besides the appraisal that estimates the property rent. So in this case, let's pull up our most popular option, which Jose will talk about in detail here in a second. So under expanded investment for a single family 1 unit, we will go to investor DSCR. We'll go to a 3-year prepay, and we're going to see the rates are approximately the same as the bank statement options, but we don't need income documentation. So these are our most popular programs by far for our investors. And you can see here we have rates from just under 9 for 1 point in cost to a little bit higher. So these might seem high for people who aren't used to it, but for investors that are out there purchasing properties, these are great alternatives to hard money. And obviously, there's still 30-year fixed loans, and most properties will still cash flow, obviously, under these programs. So we have a plethora of DSCR programs. You can see even more than the bank statements. We have our partners offering a ton of different options, and they vary in their qualifications. Some of our banks and partners offer short-term rental income that we can use to qualify. Some don't. So please get with our loan officers to figure out which ones of these DSCR programs will work best for you. Now let me pass it off to Jose here, who can talk a little bit more about what makes our DSCR program special and some of the tweaks we can do to make this a great opportunity for those investors that are looking to even max out their LTV anymore. So we do have a few options where we can even go up to 85 LTV on an investment property using the DSCR income. But since those are a little more detailed, I'll go ahead and let Jose take over and show his screen where he has a detailed quote laid out for our 85% DSCR options that we have. So go ahead and take my screen off. Let me upgrade you here, Jose. There you go.
All right. I just wanted to do a quick reply here to Javier Arrieta, who just messaged us, necesito un préstamo para Colombia. Well, Javier, no sé si lo necesita para Colombia o para un colombiano en los Estados Unidos, pero puede comunicarse conmigo. Ahí está el email mío, jose@themortgagecalculator.com. Okay. All right. So please reach out. Let me share my screen here. Real nice nuggets of info here. We're going to blow your mind here with 15% down purchase for a DSCR. Now, keep in mind, this is a program. Let's do the 3-year prepay option. This is a program that allows, to refresh everybody's memory, the borrower to be qualified simply on the cash flow generated by the property. The debt service coverage ratio is determined by dividing the gross monthly rent by the housing expense, the PITI, and if applicable, any association fee if it's in an HOA or if it's a condo. Now, keep in mind for the 15% down option, the debt service coverage ratio typically has to be 1.25 or above. So it does have to be a solid property that is cash flowing above, definitely above 1.0, and in this case, above 1.25. But also keep in mind, Fannie Mae doesn't let you touch conventional loans on a full doc, any investment property one unit with less than 20% down, and then you have to worry that your rate is within compliance levels for the fees, which, depending on your borrower's credit score, it may not be. You have to have like the perfect borrower walking on water. So here we are, 15% down, rates as low as 9.75, buying it down. So this is 400 and what's my loan amount here? Four and change. So, definitely you're looking at, I believe it was 2.25 points down here, and then working its way up to like 3 point something points at the max level at a 9.75. This is with a 3 year prepay. Now, if you want to better the scenario, you can add the 5 year prepay, and you can see I'll do side by side. We're here. This one is 9.499, the lowest rate to buy down, and this one is 9.75. So it's approximately 0.26 of a percent improvement in the rate for the extra 2 years of prepay. So again, this is for a purchase. This is applicable for a one unit only, 2 to 4 units. Max LTV on those is 80%. But on the one unit, this is especially good for the lesser, valued property that has a good cash flow. I've seen these properties DSCRing 1.5, 1.6, 1.7. You're looking at $180,000 property rented for, 22, $2,400 a month. That's an amazing DSCR. So that's what you're going to be here. 15% down, as low as 9.499. Keep in mind also, I mean, obviously these rates, aren't low, but a conventional rate at an 80% is going to be in the sevens with similar, very similar expense, and it's going to be 5% more down payment, and it's going to be full doc. So keep in mind, most of these borrowers are not full dockable, if I may invent that word. They're not full dockable, and they also want to maximize their purchasing power. So the higher the LTV, the better for them, because they don't want to buy just one property. They want to buy like 3, 4, 5 and take advantage of everything that's going on in the market with the rents increasing. All right. So now we show you a similar amazing option, is cashing out at an 80% LTV with a DSCR. Again, conforming, can't touch this. You cannot do an 80% cash out, 80% LTV cash out investment property, conventional. Can't touch it. Just like you can't do an 85% purchase conventional. Even if you have a 1,000 credit score and make $1 million a year and have like a 0.1 DTI or whatever, it's not going to happen. So this is the best option. And right here, you're looking at, with a 3 year prepay at an 80% cash out. Let me plug in this in here. You're looking at 9.125 rate, which is pretty good considering you can't do this agency. So for your investor that wants to maximize, and then if you want to get them a little bit better rate, you go to the 5 year prepay, and you're still looking at a good scenario here. The differential here looks like about a little bit over an eighth of a point, but it's also a little bit cheaper in cost. Is it like $1,000 less in buy down fee at the lowest possible rate? And then you can still do 10.25 with this, I believe, was a half a point or 3/4 of a point there. So very good options. Now, if they want, just to show you, the difference, if you go to a 75, always want to put things in context. The same loan, one unit with the 5 year prepay, now you're looking at 8.25 with even lower buy down. So the other one here, we were 8.99 at the 80% with 12,500 in buy down cost. Here you're looking at 8.25 with 11,719. So it does get better for the borrower. Obviously, at a 75, Still 75% cash out. Don't think you're going to get any hits on a conventional loan, but definitely DSCR all day long. We can close these. And what's happening here, remember the opportunities here for both the investors and for both the MLOs, right? The investor could have, before they were aware that this amazing product existed, we're doing these types of transactions, cash or hard money. Hard money, short-term solution, expensive, very high rate. It's usually a 1 to 3 year loan maximum. You know, 3, 4, 5 points, 10, 11, 12, and higher percent interest rate usually. So you're going to get a lot of investors transitioning out of cash and hard money loans into the DSCR loan. Easy transition, no papers, minimal paperwork, let's put it that way. And also, may I touch on the point, in a lot of these cases, depending obviously where we send it, we have 0 day seasoning options on your cash out refis. We have 3 months, we have 6 months, and we have 12 months, depending on how you have to custom tailor your loan. They could close on the property yesterday, get the amazing deal because they're like the best at finding these deals. And then, as long as they're on title, tomorrow we can refinance them cash out at the current market value. And that's something that also that DSCR allows you to do that conventional definitely does not. Cash out conventional, it's a minimum 6 months just to do it, and 12 months to get the current value versus your purchase price when you're trying to really cash it out. So lot of value added opportunities here for MLOs and for investors with the DSCR. Again, as we just mentioned right now, it's not just about the rate; it's about the objective that they're trying to reach. More cash flow for their business, more cash for their pocket to purchase more properties, so they can keep doing their BRRRing and coming to us as the source for all of their investor loans.
Beautiful. Thank you, sir. Let me pass it over to Kyle. Can you just close out and tell everybody where they can connect with our loan officers and stuff?
Yeah, absolutely. So just to touch and kind of just wrap everything up, you see how much of an amazing opportunity it is right now. So many things that Jose was talking about as far as the advantages right now, the way that the market has shifted, the advantages of going non-QM, of doing these DSCR products. Notice how many things Jose mentioned that you cannot do going conventional. Right. So it's an amazing time here where it's actually easier and more beneficial in a lot of ways to go the non-QM route or the DSCR route. So whether you're an investor watching or a realtor that has investor partners, maybe you're a loan officer that has investor clients, this is a real great opportunity because the market rent is going up, right? We all know rents are very high. So it presents this amazing opportunity to be able to find properties and be able to purchase them with as little as 15% down with no income documentation, no employment verification. And so again, you could take hard money, or even if you have cash, you could buy one property, or you could have cash and still without any income paperwork or employment paperwork, you could buy multiple properties with that same amount of cash here with a 30-year fixed loan. And then, as Jose said, you can also refinance even with no seasoning. So amazing opportunities here, no matter what you are in the business. To go ahead and take advantage of these, you can go to our website, themortgagecalculator.com. We actually have that pricer on there where you could price out some loans yourself, or you can just submit and we can connect you with one of our loan officers who can price out deals for you. You could send us an email, info@themortgagecalculator.com. We have over 350 loan officers all across the country that can help you out. So go ahead and get in touch with us. We will connect you with one of those loan officers so we can help you out. So Thank you everybody so much for tuning in. Again, the website, themortgagecalculator.com right here. We specialize in these non-QM programs. Of course, our loan officers can help you with conventional FHA, VA, USDA, and all that kind of stuff. But we really make sure that our loan officers are trained to help you with these specialty programs. Our loan officers can go above and beyond, work with self-employed borrowers, work with investors on these type of non-QM products. So thank you everybody for tuning in, and we will see you tomorrow. Every day we do these live rates. So you can come check us out tomorrow as well. Thank you for tuning in.